This is how I traded the ES for June the 28th based on my fib methodology. I started drawing my fibs from this high to this low. As you can see, price almost got to 50% level, was one tick away, then went past the 0% line. So I've drawn a new fib over here, which meets the first rule's criteria. It broke through the 76.4% level, so I drew from here to here. It bounced somewhat close to the 50% level, and then as you can see, price just went through the 0% level, through negative 23.6, paused a bit, and through negative 50. So I drew an extended price fib from the previous high to this low, which would be here, to the new high, which was there. Price came down one tick away from the 50% level, and then went past the 0% level. Now, this is something that I'm still having a bit of trouble trying to define, when to just move the 0% line like this, or to draw a regular fib in the same direction. Because, okay, let me show you what I did today. I had this fib up to here before the market opened, and I was trying to decide on whether I should draw a new fib from here to here, which before the market opened I knew the 76.4% level broke, so I would have had to just draw a fib in the opposite direction at this point, even though right here it doesn't meet the criteria for the first rule, but by the time the market opened it did, as you can see right here. So what I did was, since price had gapped up overnight, then I thought price might go in the direction of the gap fill. So I drew my fib in the opposite direction right here. As you can see, the 0% line broke, got to negative 23.6, back to 0. So I moved my line over here, and I placed a stop, a sell limit order at 1280.50. So I was looking to grab 5 ticks, and I was risking 6 ticks. Now as you can see, price traded to the level where I had my order. I did not get filled, went to 23.6, went through the 23.6 level, and then came back up. I got filled here, and then price just went back up against me, and I was stopped out right here for a 6 tick loss. Now this could have been avoided if, when I had my extended price fib from here to here, instead of drawing a new fib from here to here, I would have just moved the 0% line from this high to this high. Because as you can see, had I done that during my pre-market hour analysis, then by the time the market opened it would have been right at the 50% level. Now I would not have taken this trade, because the distance between the 50% level and 76.4 would be more than 2 points. It would be 2.25 points, even if I entered right at the 50% level. So I would not have been looking to take this trade. Instead, I would have waited for price to go back up into this area here, and at this point in time, since the extended price fib would have been too wide, had I moved it here, then I could have drawn a fib in this direction. Okay, but as you can see, that's not what I did. I instead drew from here to here, which broke before the market opened. Then I was looking to trade in the direction of the gap fill. So I took my first loss here for 6 ticks. Then I drew from this low to this high. I wasn't looking to take this trade because as you can see, the profit target would have been 5 ticks and the stop loss would have been 8. So I wasn't looking to trade this level. I was waiting either for a break of the 76.4% line, the price to go above the 0% line, which it did right there. So I drew a new fib from this low to this high, which at this point does not meet the criteria for the first rule. I needed to at least get to 1285.25, which it did right here. Okay, so I would have moved my line over there. Still, this would not have been a trade I would have been looking to take because of the distance between these two. It's not the same. I want it to be at least the same, or the distance between the 50% level and the 23.6% level to be greater than the distance between 50 and 76.4. So price again went above 0% line and back down to 23.6% line, so I moved my 0% line there. Now I was looking to take the trade. He placed a buy limit order at 1283 3/4. I was looking to make 4 pips and risking 6. And then as you can see, I got filled here and I got filled at my target here, so I took 4 ticks at 1 point. Price then went through the 0% line up to the negative 50% line. Now in cases like these, I am not looking to draw an extended price fib because the distance from this 50% line to this 50% line is almost like barely 4 points. In this case it's 4.5 points, so it's still something I would trade using a regular fib. So I just drew another regular fib from this pivot low to this new high. Okay, and I was looking to take a trade here at 1286, so I was looking to make 4 ticks or 1 point, and I was risking 6 ticks. Okay, now as you can see, price traded at this level at 1286 here once, twice, 3, 4, 5 times. I did get filled at this price, even though price did not go through this level and down to the 50% line. I did get a fill here because it traded on the offer side. Then price went up to 1287, which is where my target was, and look how many times it bounced off 1287. It's a once, twice, 3 times, 4, 5, 6, 7, 8, 9 times. So I also got filled at my target at 1287, even though price did not trade through that. Okay, price went bid at 1287, so I did get filled. And then price went through the 50% level to the 76.4. It did not break this line, and finally it was 12 noon Eastern, so I stopped trading. So I took 3 trades, lost 6 ticks in the first one, then I made 4 ticks in the second trade and 4 ticks in the third trade. So after the 3 trades, in total I had 2 ticks profit minus commission. Still a little bit of profit, which is much better than losing money. Okay, so that's how I traded today. Thank you for watching.